Guys, good evening. Pratheesh here. Today, we'll look into the trade plan for tomorrow, as usual. So today was a big day in markets. A lot of stop losses jumped today because of a sudden sell-off happened in the index, both Nifty versus Bank Nifty. But the effect was more on Nifty compared to Bank Nifty. So we'll take a short look on what happened actually. So this is a Nifty continuous contract, and we had a gap down, continuous back-to-back gap downs are there, and we closed as a kind of a balanced profile in the previous session with a tail at the bottom. So for today, my plan was that I can look into the previous video. My plan was that, say, like as long as markets are not accepting inside this tail, okay, you can go there, rotate upside, and most probably they'll go and close the gap. So this was the initial bias we had at the previous session. That was a trade plan, but we don't know where markets are likely to open. It can open below this tail, it can open gap up. Okay, possibilities are unlimited. We cannot predict whether it will be a gap up opening or a gap down opening, but we can always say that as long as tail is not accepted, we'll likely to go higher and close this gap. If the tail is accepted, then we'll look for a lower prices. That was the bias for today. And what happened today was like market open flat. Okay, more or less they open inside the range of previous session. Started early in the session, it started to break the day high, previous day high, but unable to sustain, came down. Okay, then it was rotating within the previous day's range for 1 hour, that is within the IB. So opening itself, it was a kind of a failed breakout. Why it is a failed breakout? Because we went above the previous day high. But we could not sustain higher. So it's a kind of a breakout failure on the upside. Okay, then we started rotating down till previous day's value area low. Okay. So previous day's value area low, there was some kind of responsive buying coming into the picture. Okay, they are not allowing the price to go till the tail zone. Okay, anything below the value they are considered as cheaper, and they started pushing the price higher to close the gap. Okay, so this was happening. So let us take a quick look on the order flow chart. What happened at that particular point, where it is somewhere around very close to the previous session's value area low. Why this kind of movement happened? Okay, we'll check what happened over there. 22,176. Okay, before that, what happened now? We got an IB. We are waiting for a IB extension on either side. So we got an IB in the sense it's the first 1 hour of the price action in the market. So we call that as an initial balance. So normally we look for a price extensions from the initial balance either side. Okay, and we look for a confirmation that the extensions are a successful one or a failure one. That is simply put as IB breakouts. That is 1 hour breakouts. Whether that breakouts are a successful breakout or a failure breakout. If it is a successful breakout, we will continue to trade in the direction of the breakout. And if we come to know that it is not a successful breakout and it is a kind of a failure breakout, okay, failed breakout, then we'll always look for a mean revision. This is how we look with respect to IB extensions. So today also we got an IB extension, that is C period. Okay, within the next period, third candle of 30-minute, we started to break the initial balance low. Okay, we started breaking that IB low and testing this value area low, and slightly it went below the value area. All of a sudden, there was some kind of responsive buying below the value, and we got a close back inside the IB. Okay, so all these confirmations are done based on 30-minute candle closing. Without that, you cannot say that it's a failed breakout or a successful breakout, because we are monitoring on a 30-minute candle. So until we get a close of around 10:45, that is around 10:15 to 10:45 was this candle time frame. So by around 10:45, you will come to know that whether this initial balance breakout is a successful or a failure one. Here it is considered to be a failure one because we did not get a close outside this IB, but we went below the IB and we came back inside the IB. So it's a kind of a failed breakout on the downside. So here in market profile language, we call this as a probable FA. Okay, probable FA. So FA in the sense, one side of the IB is taken out and price did not sustain, and we go and tag the other side of the IB. So if the other side of the IB is tagged, we call that as a FA. Okay, till you get a confirmation, till you go and tag the other side of the IB, it is considered to be probable FA. But we can take trades with respect to probable FA. The bias is that, okay, you got a failed breakout here. So if there is a failed breakout, then you could look for a main revision trade to tag the other side of the IB. So always you can go and take a trade at the next candle open with a stop loss below the low of the candle. So this is your SL, okay, low minus say like 20 points. Okay, always you use a filter of 20 points. Don't keep stop losses exact lows or highs. Always keep a filter of 20 points for Nifty and double that 40 points for Bank Nifty. So you could take a trade at around somewhere around here during the next candle open itself. So your risk is something like this. Okay, this is your risk, whereas your reward is something here. Okay, so this is your risk, this is your reward, and this is your risk. By looking into that, it is comfortable that, okay, your risk reward is good and you can always pull the trigger. Okay, so market went and took out the day high. So your target is being achieved. Now come to the order flow chart and see what happened at that particular 21 that value area low. So here we can see 21,375, 22,170, 175 somewhere around. You can see there was some kind of responsive buying coming over. Responsive buying coming over here. We went to tag the VWAP, and then again they came. Again responsive buying was there. Then you could see a price close above the VWAP with a buying imbalance. This is a very strong setup to pull your trigger. Okay, if you are waiting for a lot of confirmation, or you get a responsive buying, always you can take a trade. The next candle open with a stop loss below this candle with a 20-point filter. That is one case you can do. But still, if you're worrying that, okay, price is below the VWAP and how should I take a trade? If I take a trade, whether my stop loss will hit or not. And if you have all those confirmations, wait for such responsive buying or initiative buying to happen above the VWAP. So here, what had happened was that we got a responsive buying followed by another responsive buying, and you get an initiative buying over here. You got initiative buying plus you got a buying imbalances, and the candle closes above the VWAP. So all these confirmations were enough to pull the trigger at least somewhere around 22 to 40. Okay, it is ideal to go at around 22, 190 is ideal case. But if you're still worried that price is below the VWAP and how should I pull the trigger, whether it will end up in making a loss, and if there are all these confusions. Now, this is the area where price is telling you that you don't have to any confusions. Your confusions of having price below the VWAP is now invalidated, and I'm getting a close above the VWAP. Now, it's obvious that you should pull a trigger with a 22 to 40 somewhere around, having a low below the imbalance candle. This is your buying imbalance in the sense buyers are aggressive over here. You can see the time frame in the candle, and this candle, this chart is a range bar chart, and we don't use time-based charts. You can see the aggressiveness of the buyers over here. You can see 10:58, 11:3, 11:5, 11:5, 11:6. Okay, within 1 minute interval, markets are moving very fast. So this each candle represents 20 points. Okay, the high to low will be 20 points. So as long as markets are within these 20 points, you don't get any other fresh candle. So whenever market breaks out of this high, you get another candle. So like that, each and every candle will be of 20-point range. So if you look at the aggressiveness of the market, you can look at the timing over here. Whereas this candle 10:58 to 11:3, so there is a time difference of say like five minutes over here. But when the aggression is picking up, you can see the time frame over here. 3, it translates into 2 minutes. Once this imbalance is there, then market started moving very fast. See 11:5, 11:5. So from here 235 it went all the way to 265 within a minute. Okay, so that is the aggressiveness of the buy. So it happened, and we went and closed the gap over there. So now let us look at what happened when we went and closed the gap. Okay, still markets are one time framing up, and we started going there, and we went and closed the gap. So at around 22,340, something has happened over there. See here, we got a clean rejection over here. At around here also you are getting a rejection. Okay, and very close to 22,340. So this was happening at around 22,330, 340. Okay, it doesn't mean that you should close the gap and fall. By looking into this rejection itself, I can say that okay, markets may come down, and I could pull the trigger, like a short trigger at the next candle open. If I have to place a short over here, it's better I can place here. I can short the markets here. Have a stop loss above this candle. So this candle What is the candle high? This candle high is somewhere around 22,325. So I have a 20-point stop loss above this candle. 325, 35, 45. Okay, 45 will be the stop loss. So this candle high is somewhere around the 42. So I luckily survived in this short trade without hitting my stop loss. Okay, even if you hit your stop loss and then say you get another kind of rejection. So here market is giving some whipsaws. You get a rejection, then immediately if another responsive buying is coming, another rejection, another buying, then back to back 2 candles you're getting a clean rejections over here, then you can always short. So see, this is a range actually. This is a range. Okay, coming down, coming down, coming down. The range is breaking. Once the range is broken, you could have taken a trade here, but I don't know whether you will be able to get your orders here because markets are moving very fast over here. At 1326, we are at around 22,300. Okay, 1326. Within 1 minute, okay, 1327, we are at 1327, we are at 22,135. Okay, 22,300 to 22,135 within 1 minute. Okay, that is the aggressiveness of the market today, which happened. After that, it gave a small pullback, and then it came tested that level, and then it went up. All these whipsaws happened later. Okay, and this was a very, very, very very brutal fall happened today. But can we trade that? Yes, obviously we can trade that. But can we expect this target? No, never. If you have taken a trade at around 340, maximum worst case what you have done is that you would been targeting till this previous day high or somewhere around. Once the VWAP is taken out, then you would have targeted till the previous day high or somewhere around. Okay, but this you could not expect it, but markets gave you for the risk what you have taken. Okay, so you are lucky enough today so that you got that move. You would be able to catch that. Okay, fine. So now another catch here is that we got a early neutral day. What do you mean neutral day? Neutral day is that both IB high and IB low is being taken out. First IB low is being taken out. Then price went and took out the other extreme IB high. So both sides of the IBs are taken out. So that is what we call as a neutral day. So neutral day means it's a very challenging day to trade because you could see a lot of whipsaws. Okay, fast moves when you get a neutral day. This is the characteristics of neutral day. You can go and check any neutral day. You will have a lot of whipsaws and a lot of volatile price action during these neutral days. Neutral days means both sides of the IB is being taken out. Either you can take or target the IB high, then you can come and tag the IB low, or vice versa. Like what happened today. IB low is being taken out, then IB high is being taken out. You confirm a neutral day. And the most important part here is to when this neutral day is happening. Okay, neutral days can happen before H period. Okay, or after H. So this is very crucial. H period in the sense it's somewhere around 1245 to or 1246 to 150. Okay, after H means this could most probably go as a neutral day. Until end of the day, most probably it will be a neutral day, whether it could be a neutral extreme day or it could be a neutral center day, somewhere around neutral day will be there. Okay, but whenever you get a neutral day before H means before 1245, if you get a neutral day, there is always a possibility for the market to mean revert. Okay, make a note of this point. This is very, very crucial point. Nobody will tell you about this point, and no market profilers will teach you this. Okay, so make a note of it. It's very, very important. Neutral day is before H and neutral day is after H. Very, very important. So you got a neutral day before H, and there is always a possibility of market to mean revert. That was the context. And now you get a confirmation. So you have the context with you, but for the market to react, you need to have some good entry pattern. So that you can look into the order flow. Order flow was giving a good rejection. Plus, you have a background of context that before H, market may likely mean revert. So put together, you pull a trade. Okay, putting it together, you will get a trade, and then that delivered. If you ask me whether this move was expected, no, never. We never expected this kind of move. We expected that market could go and close as a neutral center day. Because before H, if any neutral day comes, most probably it will end up as a neutral center day. That was our expectation, that we could come and tag somewhere around 245 or 250 levels. Hardly 50, 60 points we are able to capture. That was my intention. But markets are so kind. Okay, so it gave you more than what was expected. Okay, that's good. So this is what happened in Nifty as of now. So now, what is likely to happen next session? Next session, outside day. Okay, today we got an outside day. Outside day means the previous day is completely engulfed. Okay, so it's an outside day. Normally, after an outside day, what happens? You go for a sideways balancing session. Okay, but this outside day got a close at the lower extreme. So if you get a follow through below this low, what is the low? Low was somewhere around 22,027, and this candle low is also low is unsecured. Okay, you can see this low is unsecured means it's a poor low, not an unsecured low. So the downside probe is not yet completed. So that is the indication of having this poor low. So most probably after an outside day, we should go for a balancing. But since we have unsecured lows at the bottom, there is more chance for the market to get a follow through on the downside. Okay, not follow through downside. If that downside follow through happens, then we are going to test these lower levels. We have a weekly POC somewhere around weekly POC is there at around 21,940, and the March month low is somewhere around 21,796. So these levels will be tested, and if I can combine these two levels, okay. So let me combine this profile. Okay, let me hide the other profiles. So you can see here. So I'll change the setting. Okay, so looking into this particular thing, we are at around 22,022 now. So if we get a follow through, straight away we'll come and target around 21,960, 940 band. Then if 940 goes, then we are open till 21,796 or 21,800 levels. Okay, clear? We are open till 21,800 levels. In between, you have this POC supports are there, 910, then 878, 840. Okay, so many in between small supports will be there, but the ultimate target will be somewhere around 21,797 if you get a follow through downside. Okay, till 21,797 we are open till now, and below that we need to assess again. Okay, below that we need to look again, because once you target this 21,797 or this weekly low, we had this big composite B profile. So you can see this 1, 2, 3 days of B. I think no, not 2 days of B. This is a This is a this particular area 820, 796, 820. So we have been referring this level, right? 21,795. Okay. So once this 790 or 800 is being taken out, then we'll go and target 21,600 levels. That is your February low. Okay, 21,600 levels is the ultimate target on the downside, I expect. Okay, if you get a follow through, most probably we'll stop at around 21,796, 800 levels, and we look for a bounce. But markets can do anything, right? If you break that 795, trade below that, then 600 is your ultimate destination. On the upside, say like we open flat. Okay, assume that we open flat inside the range, then probably we get a sharp pullback towards this high 21,196 or 200 levels, somewhere around. If you're able to sustain about 21,196 and 22,200 levels, then we'll go and target this VPOC 270 and probably 330, 340 is possible. Okay. Otherwise, most of the case, if you open inside the range, probably it could be a flat day for tomorrow, because we had an outside day. If you get a follow through, downside is open, and you don't get any follow through, and we start coming back inside this range, then probably we'll trade within that range and end as a flat balance today. Okay, so that was the bias for Nifty. Now coming back to Bank Nifty. Bank Nifty again a big down day today with multiple distributions on the profile. You can see here one kind of distribution was there, here another distribution. So multi-distribution profile, a poor structure, everything was there, and we have landed up somewhere very close to this what do you call it as 4-day balance was there. Okay, this was the 4-day balance. So if I draw this 4-day balance and remove this thing and change the settings, this needs to be changed for Nifty as well as Bank Nifty. Now this is a clean 4-day balance. So what market was doing is market was coming and testing this 4-day balance extreme. Now we can just use this level also somewhere around here. Okay, they came very close to this extreme zone, and then there was a small pullback. Okay, so now if you get a downside follow through, okay, if you get a downside follow through next session, then probably this entire balance is going to be taken out. 1, 2, 3, 4-day balance. So this 4-day balance low is somewhere around here. So 4-day balance low is somewhere around here. The 4-day balance high, market tagged the 4-day balance high. So if the day low is being taken out, straight away market will come and tag 46,600 levels. This is future start, right? Okay, Bank Nifty future start, right? 46,600 levels is open, and below that again we have to look. Below that again we'll go and tag 46,000. Again we have 1, 2, 3, 4. Okay, again another 4-day balance was there. Or else what you can do that you can make this as an entire balance. That is also possible. As of now, you look into this 4-day balance. If they sustain below 46,600, then 46 will be your ultimate destination. Okay, because we have tagged this upper end of the balance. Now, if this day low is being taken out, if today's low is being taken out, there is a fair chance that market to test this balance extreme low at around 46,600. In between, you have support at value area high, POC, all these stuffs will be there. But ultimate destination is this one. You have to manage your trades accordingly. And now, say like if you open inside the range and we are not able to take the day low, and say like market or opening inside the range, in the sense we go and reject at these levels, 47, 500, 550 levels, we will get a rejection and we'll rotate within this band. Opens inside the range, trades and goes, rejects, we'll be trading within this band. As long as the downside, this low is not taken out, and the upside, this level is not taken out, we'll rotate within this band. Say like market went up this level, rejected, then again coming back and taking out this level, then possibly we'll go and target this upper tail. Upper tail, or in between, if you have this POCs or you have today's POC something here, this will be tagged 47, 750, somewhere around 850 levels, you will get a tag. Okay, it all depends upon how to monitor order flow informations at these crucial levels. Okay, don't look into the order flow charts for every now and then, because every particular bar will have a buyer and seller, and you will get confused if you are in a trade. Okay, so always look for an order flow informations at a crucial levels, whether you have a resistance over here. So we do not know whether price will come and reject here, or say like price will come and break out this particular point. So when price is coming at these extreme levels, okay, when its price is coming at these extreme levels, you just go and look at the order flow activity, what is happening there. If you, order flow says that you get a sharp rejection, or order flow says that you get a sharp breakout, so that particular information you get it from the order flow charts, that too range bar charts. Okay, not time-based chart. Time-based charts will not be helpful for you. Okay, it is as good as a plain candlestick chart. Okay, don't use time-based charts. Use only range bar charts for order flow. That will give you more indications, because we are looking only for a 20-point breakout. Okay, 40-point range bar candle to close above the resistance, so that you can take a indication and trade accordingly. So look at order flow information at the crucial levels. Okay, if you are looking for order flow information for each and every bar, you will never make a trade. Okay, because every bar will have a buyer and seller. Say like you sold here, all of the market goes down, then you see some buying is coming into the candle, you simply exit the trade. Okay, so it's not a good practice to look into each and every order flow bar, rather than look at the areas of confluence. So like you have a resistance, you look at order flow, what's happening at the resistance. You have a support, look at order flow, what is happening at the support zone. And based on that, you pull the trigger with a risk defined. Okay, you calculate your risk, and if it is affordable, you go and pull the trade. Okay, pull the trigger. Okay, there are certain trades which are affordable and which are not affordable. Okay, if the trades are not affordable for you, don't trade. Okay, because everybody's capital will not be the same. Okay, you have 1 lakh capital, somebody will have 10 lakh capital, 10 crore capital. So every trade will not be affordable by everybody. So trade what is affordable to you. Okay, somebody can trade a 20-point stop loss, somebody can trade only 10-point stop loss. So somebody can trade only 5-point stop loss. Okay, someone can even trade 100-point stop loss also. So the trade will not. The trade doesn't know that. Okay, you are trading with market doesn't know that you are trading with 1 lakh or 10 lakh. Okay, so do what is affordable to you. Okay, with a calculated risk, then everything will be smooth. When you are looking for unaffordable trades and taking a larger quantity and then getting excited or getting panic when markets goes in opposite direction, all these are not a good thought process. Okay, so I have a clear objective in mind and work accordingly. So with that, I'm closing the session, guys. We'll see tomorrow how market reacted at these levels. Okay, make a comment on the this thing channel how you could use this information in tomorrow's trade. Okay, or if it is useful for you, just put some valuable comments so that I can add or modify something and put it in a better way. Okay, much better way. Thank you guys.